All right. Wanted to jump on here really quickly on Friday as, hey, here's some extra maybe clients as an agent or anything like that. You could be overlooking some business. It's also, this goes out to people who think maybe, gosh, I get paid so differently than everybody else that maybe I can't afford a home, or how am I going to get qualified? So booming kind of little niche right now is the non-QM market. People that maybe I don't get paid W-2, I'm 1099, I'm self-employed, I'm newly self-employed. There's just a bunch of stuff maybe that's in my background that makes me think I can't qualify for a loan. So let's just kind of go through it, maybe bust some myths, go through some loan scenarios, and kind of take it from there here. So why is this important? Well, gosh, with all the rate increases that has happened over the last 2 years, close to, um, there's just a lack of inventory, and so people are really dying to buy a house. Hey, I'm sitting on sidelines until rate goes down. You and an army behind you, also, by the way. um, but man, even if I do find a house, will I get qualified? Maybe I'm an Uber driver. I work for Amazon and I'm 1099. I'm a physician. I'm a general contractor. If you live in Boise, there's super busy. I'll tell you that personally. And or maybe millennial that wanted to start their own business, or have just maybe a family member wants to buy a house for their children. Um, Really good use case for a non-QM product is that, hey, in the pandemic, my business was booming. During the pandemic, my business took a big slump, and now kind of we're working our way back up. We're going to be to where we were, but it's taking time. That's fine. Instead of showing us your personal tax returns, we have other ways around this. So what are some of the most popular non-QM products that are out there? Well, first, bank statement, either business or personal. Asset utilization. So I have a bunch of money kind of tied up in stocks, bonds, retirement, you kind of name it. Um, Investor cash flow. That's kind of, hey, I want to buy an investment property, but once again, my income or whatnot can't support that. And then really just kind of like a clean slate, a lower credit score loan. So who are these people? Well, I kind of alluded to some of them, but gosh, entrepreneurs, owners of franchises, real estate owners, real retail store owners. I'm not going to read the list here. You can absolutely read it, but really think to yourself, hey, if I want to be growing my business, who can I be reaching out to? Well, there's doctors, there's lawyers, CPAs. Don't talk to them right now. It's not what. So we're at the end of March, so they're hustling to get all their taxes taken care of. But afterwards, man, think about this. CPAs just went through a bunch of clients, and some of them might be hinting at, hey, I want to purchase a house. Some of them might even be hinting at, um, you know, this is my first year in business, and home ownership might be a thing that I want. See, this is something, a CPA would be a great source to really talk with, maybe work with them personally for their own needs, but also to just, reach out, hey, how can you better serve your clients? um, who is really looking for a house that maybe might not want to go through the typical rigmarole of getting qualified or whatnot, that we can use this program for. Use this a lot too if you've ever worked with anybody in the field, either a professional athlete or someone that is in, um, you know, actors, musicians, entertainers. A lot of times their pay is super infrequent, or a contract might be good for 3 years, but we're halfway into it and there's no continuance. So these, your athletes, your entertainers are prime examples and targets of who would really benefit from a loan like this. And where can we find these people? Once again, kind of already alluded to it, but really kind of find your local investor network. If you live in Boise, I've been to Boise Ren a bunch of times. It's such a fantastic community that wants to just help out and kind of push information, help push our investors to really gain that, um, financial freedom that they're looking for, but they're also looking to purchase homes for themselves as well. And so sometimes, I mean, gosh, it's a great community to be in. So if you're not in Boise, I know there's real estate networks in every city, and hopefully they're just as great as the Boise branch. But man, this is perfect. One place that I think people don't look into a lot, especially agents, would be on the asset driven customers, maybe customers that have a larger net worth, talking with either like banking institutions that have a private wealth division, talking with some of their relationship managers about how you can get connected with, hey, do you have any clients that are looking for homes? If their bank can service the loan, that's awesome. If they can't, then you can use someone like me to do a non-QM loan, but you're really helping this relationship manager, really just kind of form that relationship, and they get to show that they're like the quarterback of the team, saying, hey, you were looking to purchase a house. Here's what we can do. Here's my real estate agent. Here's my either in-house lender or outside lender, and get them into, a house. Long story short. So really something that I think people might not be looking into if you're an agent is look at those big banks, really like look in your area, really large, like a Bank of America, Wells, US Bank, Key Bank, even credit unions that have wealth divisions. These are people that, and independent wealth advisors too, great resource. Their clients are looking to purchase homes, and they don't necessarily fit the box, or maybe it's easier for them to, instead of showing their 20 business tax returns, just to show one large bank account and say, okay, let's get qualified off that. New marketing opportunities. I already talked about this, just saying, hey, this is what you do and this is who you specialize working with. Second chance, you've talked with clients and maybe, gosh, they were really hot trot to buy a house a couple years ago, and then it's cooled down a lot because maybe business is slowed down, but now it's picking back up. People that maybe thought, hey, I'd love to buy a house, but it's just probably not in my cards. This is a chance for you to really get in there and get in there and just talk with them and say maybe it is a possibility sooner than they think. A lot of it too is just, hey, I had a bankruptcy or a foreclosure, deed in lieu, short sale, and it's been so many years since then, but they just think maybe it happened in '08, and they think, well, I'm done, I can no longer buy a house. Well, good news. The opportunity is here. So just wanted to give you a couple scenarios here of, your local electrician, self-employed, high cash flow, low taxable income. The problem that we run into a lot of times is the tax return. Client makes a couple hundred thousand a year, and they write it all off with legal tax, with the legal tax codes, and now we show zero income. And the issue that we run into is I have to pretend that what you tell the IRS is 100% factual, which it is. But if you show I made $0 last year, then I have to say, oh gosh, client made $0. So what can he qualify for, right? So some alternatives would be a bank statement loan, depending on the amount of cash flow and the maybe the savings in the client's personal accounts. We might even be able to use like an asset depletion. Seasoned real estate investor, work with these clients all the time. A lot of it is, maybe big cash infusions all at once, and then maybe it goes dry for a little bit, and then big infusions, or they're looking to purchase their next house, and they have 4 or 5 different loans already out there on different properties, and even if they show great money on their tax returns, Fannie and Freddie will only allow you so many loans on kind of on their dime, if you will. So looking at that DSCR program that you've heard probably a lot of, the debt service coverage ratio loan, or even if they're looking for a house for themselves, a bank statement product is showing, hey, here's the inflows and outflows of cash. Retirees, this is a huge one. Then there's a couple different options. I'm not gonna get into option number 2 too much because that's a whole nother presentation. But a lot of times I'll talk with people who recently retired, and their income goes from, up here to zero, or their retirement is they sold their business, and that's great, and they're getting paid, from their business, from the sale of the business for 3 years. Well, I need over a 3-year continuance. So if we're 3-year contract, I'm getting paid like I still own my company, but we're, 6 months, even a 1 month into it, and we don't have that 3-year continuance, I can't use that income, even though they will be receiving it. Maybe even if they're receiving a larger lump sum at the end of those 3 years. I see that pretty common when people sell their business. It's a little bit of cash for a little bit and then a big lump sum. And I can't use that. Well, what I can do is look at a couple different, asset statements. We can work on possibly restructuring that sale, so we get a longer 3-month continuance. That's not an easy task to do. So there's better ways that we can look at this, but a lot of times if these clients are looking to retire, there's a pretty big nest egg, and they might be wanting to downsize their house. So that is a good, a scenario where you want to call up, myself, so we can look at different non-QM options. The second one on this one would be a reverse mortgage. I have another presentation for that coming out soon. Reverse mortgages are insanely awesome, and they did get a bad rap, and probably for a good reason back in the day, but they are so awesome now. Anyway, I just want to throw that one out there. And number 4, the pandemic. Hey, this isn't as hurting people as much now, as we're kind of, that's in the rear view. But, we need to have, if you want to go the traditional mortgage route, you need to show your tax returns. And if the tax returns are declining, or if they took a large, hit in 2021, and then we see 2022 is better, what we're going to average that 24-month average, and sometimes that just blows the deal up. So instead of doing that, my suggestion would be, gosh, what about a bank statement program where we can look at your, either your last 12 to 24 months bank statements, and just say, and we give that to an underwriter for them to analyze, and they say, okay, based off these statements, borrower makes X amount a month. And typically that's much higher than what we see on your tax returns. And last one would be just anybody with a lower credit score. I don't want to lie to you here, the rate's probably not going to be the best, but the home ownership option is there. So if you have a client that maybe has a lower credit score that's looking in that jumbo market, loan amount anything over, so at 726, 200. Anybody that's kind of, looking at that million and a half house that maybe has a lower credit score and thinks, gosh, I can pay for this thing. I just had some issues in the past that have been resolved. Man, there's a handful of lenders right now that will go down to like a 580 credit score in the jumbo market. So there will be a little bit of a sticker shock for rate, but it's not going to be anything too crazy. And obviously, when we're talking rates, it's dependent on a lot of different factors. So I don't want to go too deep into that wormhole, but there are absolutely options. So if you're talking with a client and gosh, it's credit scores their issue, there's a non-QM for that. So quickly, just kind of going back, if you're looking to grow your business and you're looking for some different opportunities of what you can do to grow your business, work with new clients, work with maybe some higher net worth clients that are looking to take, not a first-time home buyer, but maybe really looking to upgrade their house. Non-QM is a perfect space, and it does get, when you get into the bigger homes, it gets into kind of stickier incomes with maybe there's a lot of different businesses, and it's just really complex and hard for maybe somebody that doesn't know what they're seeing when they look at like 10, 15 different business tax returns. Been there. This just kind of really solidifies it and simplifies it, I should say, into, instead of sending me all these tax returns, just send me your business bank statement, and let's just go from there. Definitely an opportunity in a market, no matter where you are. There's self-employed clients. It gives you kind of your own personal niche of saying, hey, if you're difficult, or if you're, feel like there's some difficulty financing, I have a person that can get you pre-qualified and pre-approved, so you could get out there and looking for homes, and you turn into that real estate agent that has the answers. And really, non-QM, especially with home affordability right now, and just the different way people are getting paid nowadays, it's, there used to be a bank or two that would do it, and now we probably have 10, 15 banks at least that I can shop around from, and they all have their special products and niches, and and whatnot. So last kind of thing, I know I pushed this out a couple times. If you look at my Instagram, this is the newest program. It's a no ratio loan, which what that means is this company, this lender, does not care about your employment or your income. So I had a client who, she recently went from 1099 to or no, reverse. She recently went from W-2 to 1099, and that didn't matter anymore. Or if you're in the real estate market, or if you're a loan officer, hey, some of us have taken dips in our income. So our income looked great, in 2022, great in 2022. 2023 we took a dip. Now 2024, maybe we're working our way up. Well, the underwriters are just going to look at that declining income. And so this gives you an option to say, it doesn't really matter. I have my 20% down, sometimes 25%, sometimes 35%, depending on FICO scores. But I have 20% down. I have a 680 to, 680 plus 660, actually, I can go down to 660 plus credit score. And I have a down payment, and I have reserves, and we're good to go. So this is a really awesome program that I'm just trying to tell as many people as I can about, as it really takes the hardest piece sometimes, that income and income and employment, takes that completely out of the equation, and we just look at FICOs and down payment. So that is just fantastic. So hopefully you found a nugget or two. Try to keep these super quick on Fridays, but awesome. Really glad that you're here, and glad that you came by and learned a little bit more about non-QM. I'm always available. Send me a DM, give me a phone call, send me an email. I'm always here to kind of help. How can I grow your business?